Ciao. Welcome to a new episode of helping you build wealth through real estate, brick by brick. In today's episode, we're diving into the August 2025 market stats and what they mean as we head into the Bank of Canada's big September meeting. We'll cover rates, sales, listings, jobs, and most importantly, where the opportunities are for homeowners, renters, buyers, and sellers right now. My name is Nico James-Bock. I'm the founder of the CondoWiz Group and broker at Keller Williams Co-Elevation Realty in Toronto. Here are 6 key things worth noting. Number 1, rates and the inflation outlook. As we get closer to September 17th, markets are pricing in about a 2 out of 3 chance that the Bank of Canada will cut rates. The final piece of data lands the day before with the inflation report on September the 16th. For home buyers, here's the real story. The lowest 5-year fixed mortgage rate right now is 3.94% with Citadel. If the bank cuts, variable rates could align with today's lowest 3-year fixed rates, making them suddenly a lot more attractive. Now, it's not just about math. The bank is only expected to cut once more this year after September. But the mindset shift could be bigger than the affordability shift. When people believe rates are trending downwards, they're more willing to get off the sidelines and buy. Number 2, GTA housing market snapshot. These are the August 2025 market stats. Let's turn to the GTA housing market numbers for August. So the average home price came in at just over 1.02 million, which is down 5.2% from last year and down about 1.1% month over month. Not a huge deal. That also puts prices down 24% below the February 2022 peak, making this Canada's second largest housing correction ever. Remember the heady days of February 2022. In terms of activity, 5,211 properties changed hands. That's a 2.3% increase from last August, but still near historic lows. Toronto saw a 3.5% increase in sales, which is good, while the rest of the GTA was up about 1.7%. Detached homes, interestingly enough, led the way with a 5.9% increase, followed by semis and townhomes. Condos, however, slipped almost 5% year over year. And here's some perspective. To get back to even 2019 levels, August sales would have needed to rise another 57%. Number 3, listings and inventory. On the supply side, new listings are climbing fast. Now, we saw a 9.5% jump year over year, with over 14,000 homes listed in August. Total active inventory is now close to 27,500. Now, that's up 22% from a year ago and the second highest August level since 2020. What this tells us is that sellers are feeling more confident about testing the market again. And we may even see a flood of homes come in September and October as those who paused their listings over the summer re-enter the market. But buyer demand is still cautious. So higher inventory means buyers now have more choice, more leverage, and less pressure compared to the frenzied years behind us. Number 4, market segmentation. Now, not every housing type is behaving the same way. This is a very, very interesting period in the real estate market. Condos are firmly in a buyer's market. We have roughly 20 months of inventory at this point. Smaller cookie cutter units are seeing the steepest price drops, while unique condos, like those in hard lofts and soft lofts, they can withstand a lot of the pressure. And those unique condos with standout features are still moving and quite briskly. Detached homes are in a balanced market. where neither side has a strong advantage. Semi-detached homes, on the other hand, are in a seller's market, with demand outpacing supply. One important stat here. Condos and townhouses now make up 68% of Toronto's active inventory. That's huge. And that is a result of the record number of completions that we're seeing in 2025. So it's going to take a while to absorb that inventory. So what does that mean for buyers? You can negotiate on price, include conditions, and avoid bidding wars, but only in those segments. That kind of leverage simply wasn't available a couple of years ago. Number 5, we pass to jobs and confidence. The labor market is another big piece of the puzzle. In August, Canada lost 60,000 jobs. A little bit over 60,000, 66,000. Mostly part-time positions and mostly among core working age Canadians, 25 to 54. The unemployment rate has climbed to 7.1% nationally. And here in Toronto, it's 8.9%, the highest in the country. Now, this is the second straight month of job losses, with July losing 41,000 jobs. The sectors that are hit hardest include manufacturing, transportation, and warehousing, plus professional and technical services. Then there are the labor disruptions. As I record this episode, college support workers are on strike. Just recently, nationwide, Air Canada flight attendants went on strike. And let's not forget Canada Post workers. They reached a new collective agreement as recently as this past June. Negotiations are still ongoing with the Canadian Union of Postal Workers. So there are more changes coming down the line on that front. Now, the bond market reacted immediately to these job changes. Yields dropped, showing that investors are now expecting the Bank of Canada to cut rates. And while confidence is slowly returning to consumers, the reality is buyers and sellers are still far apart on price expectations more than anything else. That's why we're not seeing a full rebound just yet. The bigger picture. This is the sixth part of the puzzle. It's the big picture. Stepping back, here is the bigger story. We are still in the middle of Canada's second largest housing correction in history. Prices are down more than 24% from peak levels. And while sales are inching higher, they're still well below normal. The flood of new listings means more supply, which actually creates opportunity for buyers. You can negotiate, add conditions, and avoid competing offers. And while a Bank of Canada cut nudge, it could nudge affordability, it's really the shift in mindset that drives the market. When buyers believe the worst is behind us, confidence returns. For now, this is a market of opportunity for those ready to move, especially in the condo sector and townhomes, where supply is strongest. But sellers with standout properties are still finding success. That wraps up another episode of helping you build wealth through real estate brick by brick. Remember, information is power, especially when it comes to your financial future in real estate. So that's where we stand as of summer's end in 2025. A market still in correction, but with key opportunities emerging. The next big milestone is the September 16th inflation data and the September 17th Bank of Canada meeting. If you found this information useful, then like this podcast and or leave a comment. I'm interested in hearing what your perspective is. What do you think is happening in the market? Where do things stand? Please share this episode with anyone who may find the content useful. Ciao.